Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. You already know, if you've been rolling with me for a while, continue to hit that like button. If you're new, hit the like, subscribe, and that notification bell and come join the family. But make sure you're not already subscribed, all right? We just want to get this information out there. Make sure you don't fall for any spam in the comment sections. I don't have a WhatsApp and all Telegram. I don't have that, right? No, I don't manage anybody's money, and just be careful for getting scammed, all right? So let's go right into it. So someone said, Larry, why don't you ever give any positive news? Well, you know what? You might have been right, because in the micro, I see positivity. In the macro, I see caution. That right? So let's talk about some positive things we had today. We had the PCE numbers. PCE. Now let's go over for the newbies what that means. PCE stands for personal consumption expenditures, right? So let's see, what is personal consumption expenditures. Personal consumption expenditures, otherwise known as PCE, also known as consumer spending, is a measure of the spending of goods and services by people of the United States. Okay? Then it goes on from there. You could read it. All right? And so I just want to be, my theory is talk to me like I'm three. So we want to see what's going on with PCE. Well, I'm going to leave a video in the box to your upper right for those of you that are viewing me on a tablet or a computer, and it will show you what the actual numbers was, and everything was pretty much as expected. What they expect is exactly what happened. So after this video, watch my live from this morning, right? We want to be well informed, because when we're well informed, we can make well-informed decisions. Now, that is positive for the market today. I see it as a really good thing. As a matter of fact, I see it as better news than CPI numbers, that sent the market up. I do. I see this as better news, because we continue to get this data that's showing that inflation is cooling off. Right. So here's some more powerful news, though it may be. I believe that this is very powerful. So Summers urges Fed to avoid pledging rate hikes after next week. Now, I want you to understand we're going to discuss why he used the word pledging, okay? So who is Summers? Summers was the former Treasury Secretary, right? And so who is worth listening to? The former Treasury Secretary. So they are talking to the Fed. Now, who else should we be listening to? How about a former Fed? Okay. And let's listen to a former Fed, and then we will break this video down and discuss it.
Yeah,
As soon as I get it.
And I
cue
and
right. Let's
we
cue
already
that
know
back a
that
little bit.
stuff
Sorry,
at
good
this
people.
point,
There we
probably.
go.
But equal billing right at the top, right?
All right, here we go.
CNBC definitely at the top.
We haven't talked in a while, Richard. Everything that the Fed has done and said, do you have a problem with any of it at this point? How are they doing? What kind of grade?
I think they're doing well. They made a mistake. We've talked about this before, Joe. That is embracing this transitory argument, which is silly. The horse is out of the barn argument, that I call it. Having to corral inflation now, bring it back. It's way out in the pasture. They've been bringing it back in. I think they moved quickly, but very importantly, in terms of evaluating how they're doing, they've been telegraphing everything. We already know that at this coming meeting, it would be a quarter point. It's already been leaked out to Nick Tamaris at the Wall Street Journal. He's the Fed whisperer. And we're hearing the different bank presidents and governors speak the same tune. So I give them credit for being transparent, not hoodwinking the market. And I think we're likely to have, obviously, another quarter point increase.
Yeah,
the question
is that
what happens after that, and
yeah,
how they react.
Given the economy.
So let's look at this, good people. Let's look at this. We had a 25, a 50. We had 475 basis point rate hikes, and then we had a 50. So that is never in the history have we've had two 75 basis points, but we've had four. So the Fed has been quite hawkish. Let's continue to listen.
In the numbers that we're seeing, and we get mixed things. Sometimes the economy looks pretty good. Other times it looks like there are some cracks. Do you think they need to go as high as they said? Can they do it with words still? If they say 5.25, can they just say it and they don't actually have to get there?
Well, Ben Bernanke used to say words are as powerful as policy itself. I think he's right. We'll see what they say after this meeting at the end of the month. And
so that was one of the things I was talking about when I said pledge. Words. Words are one of the things that the Fed has been using in his toolbox by being overly hawkish. Why did he have to be hawkish? Because he kept saying last year in 2020 that inflation was transitory, meaning short-lived. He kept saying that. He was behind the ball. Now he has to overcompensate. So now we're seeing, could the Fed bag off and go to neutral after one more rate hike? That would be good. That would be extremely good for the entire stock market. I would pivot, and I'm ready to pivot if the Fed shows that he's going to pivot. Let's continue to listen.
I would assume they'll still be determined, Powell will be determined to be forceful because he doesn't want to have two errors in a row, I would guess. The second error would be stopping early, having inflation continue on, not coming back towards the 2% target. Now, the numbers we just got today, Joe, I like to say that instant analysis is an oxymoron. It's too early to I need to spend some time, as did Steve Leisman, who mentioned time to look at the data. But the market reaction has been bland, and we'll just have to see what they can sort of deduce by studying the entrails of these numbers, and I'm sure they're hard at it as we speak.
Do you think that the 2-year and the 10-year will get in line finally with what the Fed is saying, or do you think the Fed comes down to where the 2 and the 10-year? There's some weird disconnect there, Richard. How do you?
So here's a couple of things I want to discuss. These are all important factors. So we have to this market is going to be data driven. This year, data. And it's going to be the Fed and data. That is it. If the Fed pivots, market takes off, we're good, right? So for those of you that have been hearing about the yield curve inversion and why and what does it do as it pertains to a recession, I want to quickly explain this, right? So these are our bonds, right? You have a 2-year, and this is the yield, right? And so the yield is what it yields, like a harvest yields, right? Same deal. It's what you make off of it. The 10-year, you should be getting paid more to wait longer. So as you could see, the 10-year is lower than the 2-year. You see that 4.1 versus 3.5. So that means that it's inverted when the 10 and the 2. So if the 2-year yields more than a 10-year, that is called an inverted yield curve. Every time that happens, within 12 to 18 months, we have a recession. It has been inverted forever and a day now, right? It inverted last year. And so that's one of the things that I want to bring up, that he's saying in the macro, that's one of the things of concern. In the micro, it looks good and the Fed could pivot. Let's finish hearing what he's saying because there's a lot to learn from this video.
Explain it.
Well, I mean, we've had this inversion for quite some time, Joe, and everybody's been saying this is a harbinger of a recession. The 10-year has come down from a high of, 430, has been down and then back up. It's popping around the 3.5 level. The 2-year is held fairly steady, although it's come off as well from almost 4.7.
It's nowhere near 5%, Richard. I mean, it doesn't.
I agree.
And three and a half on the 10-year. That's not where it should be if the Fed is really going to do what it says it's going to do. Somebody's lying. Either the market's lying or the Fed is lying.
Well, I don't think the market lies, and I don't think the Fed lies. And I think, look at the demand for treasuries, Joe. Central banks have been, particularly the Chinese, the Japanese.
Well, we'll just leave it at that with this. I just wanted to bring this to you guys. And yes, short term, it is looking very bullish with a taste of caution, right? And so you do what's best for you. I just wanted to explain a lot of things for the newbies out there. And I see this as mostly positive news, right? Mostly positive. So now, next week, the Fed will say how much the interest rate will be. And I will be coming live. I'm going to try to come live with that. If he says 25 basis points and we're going from neutral to there, then I'm going to say that that is a major shift, And he actually has a chance to land the plane softly. If he's overly hawkish and continue with interest rate hikes beyond, then we just kind of have to see. Remember, this is all data driven and we have to be ready to pivot. So what say ye? Leave me a comment. What do you think he's going to do? Is he going to go 50 basis points? Is he going to go 25 basis points? 25 basis points is baked in, right? The question is, will he stop there? If he does, that'll be great news. And I'm going to start buying some stock. And I don't mind not buying at the bottom because I want to wait to the data. For those of you that guess it right, you're going to make way more money than me, and I'm happy for you. But I have just learned to exercise caution. So leave me a comment of what you think is going to happen, all right? And make sure your comments are, questionnaire answers that you want or that's going to help the body. We keep it positive here, right? Listen, make sure you check out the links below. Go ahead and download Moo, deposit $100, get your free stock, right? And depending on your deposit, you can get up to 15 free stock. And with Webull, you have 12 free stock by depositing $100, right? Let me know. Make sure you have a blessed and safe weekend. Here in the Midwest, the roads are slick. A lot of accidents out there. It's snowing and all of that. You have a blessed and wonderful weekend. We'll see you later. Live, love, laugh, and learn and earn.